Hello and welcome students. In the last video lecture, I had explained you question number 8 of chapter number 7, that is dissolution of partnership firm. Now in this video lecture, I am going to explain the last sum of this exercise, that is question number 10. Okay, that is on page number 313 of your textbook. Let us read that question first of all. Satyam, Shivam and Sundaram are partners sharing profit and loss in the proportion of 1 by 2 is to 1 by 3 is to 1 by 6. By making the denominator equal, that is 6, you will get the ratio of profit and loss amongst all the three partners, that is 3 is to 2 is to 1. Okay, so the ratio that will come to 3 is to 2 is to 1 of all the three partners, that is Satyam, Shivam and Sundaram. Okay, now further, the balance sheet of the firm as on 31st December 2016 is as under. It means the balance sheet is given to you, and on that basis you have to prepare all the related accounts for the dissolution of partnership firm. Okay, the balance sheet, that is liability side capital of all the three partners, general reserve, investment fluctuation fund, provident fund and creditors. Now students, make it clear, general reserve will be distributed amongst the partners in the profit and loss sharing ratio, but investment fluctuation fund, it is not a kind of a reserve, it is a provision, so it cannot be distributed amongst the partners in their profit and loss sharing ratio. Okay, next, provident fund, also it is a liability, and creditors is also a liability, sundry liabilities. Current account, now over here current account balances are given to you, so whenever in the question current account balances of the partner is given to you, then you have to prepare partner's current account also and partner's capital account also, and all the transactions related to partners will be posted in partner's current account, not in partner's capital account. Okay, so we have to prepare here both the accounts, that is partner's capital account also and partner's current account. Next one, assets and land and building, machinery, investment, patent, goodwill, debtors, stock and cash. Okay, from debtors there is bad debt reserve also. Instead of considering the value of bad debt reserve, we have to consider the value of bad debt reserve as a part of provision. Okay, so that will be recorded on the credit side of realization. Okay. And then afterwards, the firm was dissolved on 1st January 2017. Disposal of assets and liabilities was thus as under. It means the realized value of the assets and liabilities is given to you in the adjustments. Okay, so before reading the adjustments, let us prepare first of all the related accounts for dissolution. Okay, as you can see on the board, the first account that I have prepared, that is the main account in case of dissolution, that is realization account. Second one, that is partner's capital account. Third one, that is partner's current account, and the last one, that is cash account. In the last video lecture also I explained you that here you don't have to prepare the new balance sheet because here the firm gets dissolved. That's why new balance sheet is not to be prepared. In case of cash account, the cash account should get pending at last. It means your answer is correct. So these are the conditions to see that your answer is correct or wrong. Okay. Now moving on with the first account, that is realization account. In realization account, on the debit side of realization account, we are recording all the sundry assets. Okay, except cash. Okay. So over here you can see the sundry assets. It includes land and building, machinery, investment, patent, goodwill, debtors and stock. Okay. So I have recorded all these sundry assets on the debit side of realization account at their book value that is given to you in the balance sheet. So land and building 2,50,000, machinery 1,50,000, investment 1 lakh, patent 5,000, goodwill 25,000. Debtors balance, students, I have written over here 30,000, not 25,000, because bad debt reserve I will be recording on the credit side of realization account in the heading of sundry provisions. Okay, so I have recorded over here 30,000 and on credit side I have written 5,000. Ultimately, debit effect would be of only rupees 25,000. Okay, so that's why I have shown the value of debtors over here 30,000 and not 25,000. Next one, that is stock value as it is 15,000. Total of all the assets that come to 5,75,000. Just as we are transferring all the assets on the debit side of realization account, we have to transfer the liabilities also on the credit side of realization account. So in case of liability, you can see there are two liabilities, that is provident fund and creditors. Okay. So the first heading we have given 5 sundry liabilities, that is provident fund and creditors. Provident fund, that is 1 lakh and creditors, that is 2 lakh. Okay. So the total amount of sundry liabilities, that let us do the posting of the opening balance of partners capital account, current account and cash account. Okay. Now in case of partners capital account, the opening balance that is given to all the three partners, that is 50,000, 50,000 and 50,000. So partners capital account, first entry that will come of the opening balance on the credit side, that is by balance brought down 50,000, 50,000 and 50,000. Then afterwards last it is given to current account balances of Satyam and Shivam, that is 5,000 and 2,000. So the balance of current account is given of only two partners. Okay. So that balance you will record the partners current account on credit side by balance brought down in the column of Satyam 5,000 and in the column of Shivam, that is 10,000. Okay. Next, then afterwards the cash balance opening balance that is given to 5,000. So that we will be recording in cash account debit side first entry, because cash account is always having a debit balance. So it will be recorded on debit side of cash account to balance brought down, that is 5,000. So now up till now we have completed the posting of all the entries of the balance sheet in the related accounts. Now let us look at the adjustments. In case of adjustments, the first adjustment is sale of land and building 4 lakh, machinery 1 lakh, investment 550,000 and stock rupees 5,000. It means the realized value of certain assets that is given to you. So whenever you are recording the assets at the book value on the debit side of realization account, while selling of those assets, it will be recorded on the credit side of realization account. And because of selling of those assets, cash or check will come in. So cash or bank account will be debited. Okay. So here you can see the realization account credit side and written by cash account heading are given and the name of all the 4 assets, that is land and building, machinery, investment, stock 4 lakh, 1 lakh, 50,000 and 5,000. Now the second adjustment, you look at it, from debtors rupees 15,000 are received, right of remaining. It means total value of the debtors, that is 30,000. From 30,000, 15,000 is received. Remaining is to be written off. It is considered to be as a loss. Okay, to write off. So here you can see the debtors value also have included, that is 15,000 on selling of that asset, that is debtors. Okay, so realized value of debtors, that is 15,000. So the total of all the assets, that is the realized value of asset, that will be 5,70,000. And always adjustment will be having two effects. So one will be on the credit side of realization account, and the second one, that is cash, will be received because of selling of those assets. So it will be recorded on the debit side of cash account. To realization account, that is 5,70,000. Okay. So first and second adjustments that we have completed. Moving on to the third one. Out of total creditors, a creditor of 10% was given unrecorded investment of 10,000 and remaining amount paid in cash. Remaining creditors are paid at 10% discount. Now students, this is a very important adjustment. Over here the creditors value that is given to you 2 lakh. Okay. Out of 2 lakh that is given to you, that investment, unrecorded investment is to be paid worth rupees 10,000. Okay, so unrecorded investment, so ultimately that is not recorded in the books of accounts. Okay, so if it is not recorded in the books of accounts, so we cannot pay it also at the time of pay to the creditors. So it will be considered as cash only. Again I am repeating this, 10,000 will be considered as cash payment to the creditors. It will be not considered as payment of unrecorded investment, it will be return of payment to creditors. Okay. Then afterwards, a remaining amount paid in cash. 10%. So 2 lakh, 10% that would come to 20,000, right? In case of 20,000, they are paying, in return of 20,000, they are paying 10,000 unrecorded investment. So now the remaining amount, okay, now the remaining amount, that would be how much? That is 2 lakh 90%, that would be 1 lakh 80,000. Again I am repeating students this question because this adjustment is quite important. First of all, the value of creditors, that is 2 lakh. Okay, in return of 2 lakhs, 10% of creditors, 10% that will come to 20,000. Then 20,000, in return of 20,000, they are being investment, unrecorded investment, they are being given worth rupees 10,000 in return of 20,000. Okay, now the remaining, that is 2 lakh 90%, 10%, that is 20,000, they are being paid unrecorded investment. Now the remaining, that is 90%, that would come to 1 lakh 80,000. Okay, now this 1 lakh 80,000, they are being paid at 10% discount. So 10% discount of 1 lakh 80,000, it would come to 18,000. the creditors. This much amount is paid in cash to the creditors of rupees 1,80,000 and creditors of 20,000 they are paid unrecorded investment of rupees 10,000. But now over here the investment that is not recorded previously in the books of accounts, so we will pay both these amounts at present in the form of cash to the particular creditor. So the total amount paid to the creditors, that will be 1,62,000 plus 10,000 is equal to 1,72,000. Okay, so the amount to be paid to the creditors, that will be 1,72,000. This point is very important in this entire sum. Okay, so here you can see the amount that is to be paid to the creditors, that is 1,72,000. So whenever you are writing the liabilities on the credit side of realization account, then whenever you are paying their liabilities, it will be recorded on the debit side of realization account and credit side of cash account, because that much amount of cash goes out from the firm. Okay, so here you can see on the debit side of realization account are written to cash account creditors, that is 1,72,000. Already I explained how this value 1,72,000 came over here. Okay, next one, that is unrecorded stationery expense, that is related with the fourth adjustment. Unrecorded expense of stationery is 6,000 paid to Onion Stationery Mart. No amount is realized for Google and Pet. Unrecorded expense of stationery paid. Previously that expense of stationery that was not recorded in the books of accounts. But at the time of dissolution of the firm, that unrecorded expense of stationery is to be paid to the stationery mart. So it is also an expense for the firm. So cash will go out. So the entry would be the same. That is realization account debit to cash account credit. So I have given the combined effect of both the entries. That is for creditors 1,72,000 and for unrecorded stationery expense, that is 6,000. One more thing, there are two liabilities, that is provident fund and creditors. Okay, so creditors already we have decided the payment of creditors out of 2 lakh will be paid rupees 1,72,000 and for provident fund 1 lakh there is no any effect given to you. But students, in the previous video lectures and the starting of this chapter I already explained you that if any of the liability the payment due or payment amount is not given to you, then they are to be paid at their book value. Okay, so here you can see the provident fund, any of the adjustment related to provident fund to pay how much amount of provident fund that is not given to you. So provident fund will be paid as per their book value. Okay, so don't forget any of the liability should not be remained unpaid at the time of dissolution. We have to pay or discharge all our liabilities at the time of dissolution. Okay, so here we have that is 1 lakh that we are repaying in cash to the provident fund. Okay, so now the total amount of cash payment that will be 1,72,000 for creditors, unrecorded stationery expense that is 6,000 and provident fund that is 1 lakh. So the total amount that will come to 2,78,000. Now that 2,78,000 second effect that would be coming on the credit side of cash account. That is by realization account 2,78,000. Okay. Now over here you can see that is investment fluctuation fund and bad debt reserve. That is provision. It is not our liability. At the time of dissolution, we have to discharge our liabilities or we have to repay our liabilities. But it is not necessary, but we don't have to pay the provision. So no any discharging of the provision should be done. Provisions we have kept in for the unforeseen situations that will be coming in the business. So provisions are never to be paid. Okay, only the liabilities are to be paid. So over here the effect is given of creditors, provident fund and one of the adjustment that is given to you of unrecorded stationery expense. Okay, so never provision is to be paid at the time of dissolution. That is created for unforeseen situations or contingencies that are created during the business. Okay. Now moving on with the fourth adjustment that is completed. In fourth adjustment, second line is given to you. No amount is realized for goodwill and patent. Now students, make it clear there are how many assets: land and building, machinery, investment, patent, goodwill, debtors and stock. Out of that the realized value is given to you of 5 assets, that is land and building, machinery, investment, stock and debtors. But of goodwill and patent there is no any realized value. So you don't have to sell those assets or you will have no any realized value is created of these two assets at the time of dissolution of partnership firm. It is clearly mentioned to you. 1. A remuneration of rupees 15,000 was decided to pay to Shivam to perform dissolution procedure. Now, to perform the dissolution procedure, certain amount of remuneration is paid to one of the partner, that is Shivam. Okay, so the journal entry that would come, that is on the realization account, it would come to the debit side. So the journal entry that would come, realization account debit to Shivam's current account credit. Okay, so here you can see the debit side of realization account I have written to Shivam's current account, that is 15,000, and Shivam's current account credit side I have written by realization account in the column of Shivam, that is 15,000. Okay, in that one more line is there, actual dissolution expense rupees 6,000 paid by Shivam. Now the duty of the responsibility to handle the dissolution procedure is given to Shivam, and in return of discharging that responsibility he is being paid the remuneration. So whatever the expense that is paid by Shivam only, so that effect of expenses that are paid by Shivam for dissolution, that will not be recorded in the books of accounts at the time of dissolution of the firm. Suppose it may be given over here, students pay attention. If it would be given over here that actual dissolution expense, that is 6,000 and paid by the firm, then the entry would come in the books of accounts at the time of dissolution of partnership firm. Over here it is mentioned that 6,000 dissolution expense is paid by Shivam. So already it is paid from his personal account. So no any effect would be given in the partnership firm at the time of dissolution. Okay. So here the second effect of 6,000 will not be given in the books of accounts at the time of dissolution. Okay. Now after completing all the adjustments, let us close one by one all the accounts. First of all, we'll close the first account, that is realization account. In case of realization account, the total of credits that is more, that is 9,25,000. I put both the side, that is 9,25,000. And difference that comes on debit side, so it is profit. It means credit side total is more, and difference comes on debit side, so it is profit. That is 57,000. Now that 57,000 I distribute among all the three partners, that is Satyam, Shivam and Sundaram, in the ratio of 3:2:1. That would come to 28,500, 19,000 and 9,500. So the total that would come to 57,000. Now that I will transfer to partners current account, not to partners capital account. Okay, mind that whenever we are preparing both the accounts, partners capital account and partners current account, all the entries related to partners will be recorded in partners current account only, not in partners capital account. Okay, so whatever the profit that came of realization account, that will transfer to credit side of partners current account. Here you can see written by realization account into bracket profit 28,500, 19,000 and 9,500. Okay, now we will close first of all partners current account, and whatever the balance comes of partners current account, that will be transferring to partners capital account, and whatever the balance that comes of partners capital account, that will be transferring to cash account, and ultimately at last the cash account should get ended. Okay, now moving on to partners current account, credit side total is more in all the three partners. Total of Satyam, that is coming 62,500, Shivam, that is 64,000 and Sundaram, that is 19,500. That total I have put on the debit side also, and difference that came on debit side, so it is credit balance to partners capital account, same balance because there is no any effect on the debit side of partners current account. That closing balance of partners current account I will transfer on the credit side of partners capital account. Okay, so here you can see the partners capital account credit side and written by partners current account 63,500, 64,000 and 19,500. Now we will find the closing balance of partners capital account, and that we will transfer to cash account. Okay, here you can see the total of all the three of credit side is more. Okay, total is coming 1,13,500, 1,14,000 and 69,500. That I have put on the debit side also, and there is no any entry on the debit side of partners capital account also. So as it is, the balance will come, and this balance that will be transferring to the cash account. I have done question mark so that you can understand that this value we have found. Okay, so the balance of Satyam, that will come 1,30,500, Shivam, that is 1,40,000 and Sundaram, that is 69,500. So this much amount of cash is being second effect of this, it will be transferred to cash account credit side. It means this much amount at the last. After discharging all the liabilities, remaining balance would be paid to all the three partners. Okay, so that will be coming cash account by partners capital account, that is for Satyam, Shivam and Sundaram. That is 1,15,500, 1,14,000, 69,500. Total that would come to 2,97,000. Now you have to see that the total of cash account should get 10. Okay, so here you can see the total of credit side, that is 5,75,000, and total of debit side is also 5,75,000. Means the cash account is getting debited. Okay, so that's all for today, students. That's the end of this chapter, that is chapter number 7, dissolution of partnership firm, and also the end of the first part of accountancy. Now in the next video lecture, I will be starting with the second part of accounts. Till then, goodbye, keep practicing, stay blessed.